Good morning, everyone, and welcome to the European crossover webinar. And we're getting some data hit also here. Be one moment. Just came in right now, which was the Eurozone Market PMI, and came in at 47.7. The prior was 47.9, so a little bit of a dip. They were expecting a little bit better, 48.1. You can see here the euro continued to dip, challenging this 1130 area here. We actually just dipped down here. You see right here into 1132. You remember our bias chart support. It's been this, the key levels is 1130 on a daily, on a closing basis. We did say it could dip as low as 1124. Looking here at the French PMIs, came in at 51. They were expecting 50.95, a little bit better. We're defending this 30 right now. We said we could go dip as low as 1124. Looking at the German data, that one came in at 44.3. Just a tenth, a bit better. Now, the Reuters poll, that's came in, they were looking for 44.8. So the surprise against what they're looking for the poll is what you're seeing here. But the improvement over, last month was actually a decline of one tenth. Moving on, as we come into the States, when we talked about this year, we thought it would be continue to remain under pressure. We would look for this to get weak numbers. The key thing would be, can we defend this 1130? And that'll be the key right there. As we move into the States, we do have building permits. That's going to be at 8 a.m. Eastern. And this, excuse me, the standard jobless claims, that's at 8:30 Eastern. We do have Canadian wholesale trade and first half core inflation for Mexico. That'll be at 9 a.m. Eastern. We do have market PMI flash at 9:45 Eastern here in the States, as well as new home sales. That'll be key because it's manufacturing. Let's see here. Later on today at 6:45 Eastern, we'll have a New Zealand trade balance. There we go. Let's go move this out of the way. We are seeing also the S&Ps. They're dipping a little bit. I know one or two guys were mentioning yesterday in the chat room about, when is this thing going to start to react? And we are starting to. I mean, I can see the point too, because I'm surprised the S&Ps are holding up so well. You would expect to start to see them slide a little bit. Looking across the board, and here's the euro. We talked about the importance of this 1130 here. And you can see that right there. Important they're going to defend that on a daily close. If not, as I mentioned before, if they're not able to sustain or defend this on a closing basis, opens the door for a move to 110 with a pause at 1080. But certainly the euros continue to stay under pressure. And let's take a quick look here with the dollar. Excuse me. I turned the corner on this thing. I sounded better in the wrap session, New York wrap, what we want to call it, and just start out the morning. I'm all starting out a little bit banged up. The only thing really bad is my earache is still bothering me. Hopefully those antibiotics will finally kick in. But you can see here, look at this dollar. It's continuing to, and I was thinking about the contra play, contra in the sense that the euro comprises 56.4% of the dollar index. So basically, one going one way, the other going the other way. And you can see here, we're continuing to push up here in the cash dollar. We still have a resistance, which is 98.33. We'll see how we stand, but certainly the momentum and everything's going the dollar way. But it's going to be key if we can defend this 1130 on the by today's close, and then let's go and take a look at the cable. And this is still pushing lower, although we're coming into an area of interest. But there's a saying that goes, I don't remember exactly how it goes, but it basically is you want to trade the technicals, but overwhelming fundamentals will kick technicals in the A every time. And obviously what you have with the cable is overwhelming fundamentals. So my point being is you can see in like this 2700, I don't think is going to stop it, but you can see it's the beginning of a pretty decent value area. And we've seen the market pause a little bit because we did see it jump right back up, but you can see as things continue to, I don't know if we want to say worsen or whatever, and it doesn't make any sense to go in and step in and buy it yet. I mean, it depends on your outlook. I know some of the guys have bought it, and yeah, if this thing with May gets cleared up, you might see this thing turn around and zap right back up to probably close to 29. So yeah, I can see that. I'll tell you what, they get this thing wrapped up, I'm going to jump in there and I'll buy it. I don't care, how high it is at one point. If it's a 50 pips, 100 pips, 125 pips, when it turns around, it will go. But right now, like I said, it's just a matter of getting past it. I know the thing with the May, they were saying they're looking at probably around June the 3rd. So, but we are coming into some big value as we move lower, because this whole area between 598 to 27, about 100 pips, is a lot of good value. I mean, value as far as a lot of volume in here. So we're pushing the outer end. And I think Steve said that Greg might have had 2550 or something like that. But good confluence here. There's 2590 and 2598. Although I can see them pushing to take out these lows. How much further, I don't know. But I don't think the wheels are completely come off the caboose, because I think people are already seeing the end. And the end, in a way, is a good thing, which I think they just want to get rid of May. And I think whoever they put in is going to, or get selected, is going to pop this thing up. Probably initially to the 28, 25. So I guess if you're getting long right now, you're looking potentially 200. But my guess is that's where they push it initially. But then I think it'll depend on who comes out. Probably see it move up to about 29, 40 or something. That's a pretty doggone good move. So I can see why people say, hey, you know what? I'll start to buy in here. You know what I mean? I'll start to nibble. And I can see the point, because any breaks above 126, I think that you'll see still good demand coming in here, all the way down between 2560 to 126, but we shall see. Sorry about that. The Canadian dollar continues to move up. I was looking at this area here. Now, that was if we made it here in the same session. We did pause, but honestly, I'm a little bit surprised it's continued to motor ahead. I thought if we'd made this move initially, then I thought I liked that area for like a little bit of a dip back. But we just kept working a little bit higher, Took this time to adjust it. Now, I would have thought we'd probably from there dip back maybe at least to the mid 30s, low 30s, but it's still trying to push higher. Quite the run, if you think about it, from where we've already come from in a short period of time. Let's go on and now let's take a look at the dollar yen. Dollar yen just kept pretty quiet. We talked about it reaching certain levels and come back, and we still have that opportunity. I think that if we wanted to, if the market wanted to, it could make it up to about 1080 and then start to run out of gas. But we shall see. Moving into the cross rates real quick. Euro Aussie still holding up very well. I mean, well, it's 62.06. Let me close this off. But if you consider how weak Euro is, you see what I'm saying? Aussie's in itself is weak, but I'm surprised it's still holding up here. I still think, watch out with this thing. Look at that. You see here, I'm looking on the daily chart. I think it is susceptible. We shall see. But you can see here, especially it'd be interesting if we finish here, something like this, although I think there's still the possibility we can dip low. And if we do dip lower, I think we'll probably make it about 16.25. My point is, it's not there's no guarantees in the market. I'm just saying from where we're at and the way the market played itself, to me, it feels like the market's kind of holding them hostage. As I said, we had the surprise election results, and then we opened them up on Sunday, brought them up to 62, came back down, and I thought when in the U.S. session, he had a chance for this market to come up here and then roll back. But as I mentioned, I think it was I don't know if it's a low from the RBA, but one of them said, "Hey, we'll consider the possibility for a rate cut for June," and then that really sent the Aussie tumbling back down. It allowed anyone that was shorting against this area, which probably looked like a decent risk reward, forced them to cover. We made a run back up here, but now we're just kind of sitting there, and that's what I'm saying is we could really. And be careful with that euro. If this euro gets a foothold below 130 on a daily close, no bueno, as they say. And Aussie yen holding just above this support level here. Let's go and get into the news and we'll get into the analysis. So one moment. So in the morning bid, May's departure and the new Brexit endgame. It looks more and more as if Theresa May's premiership is effectively over, with only the suspense now over, and she will announce the date of her departure. And that's my point here. Let's go and jump back here with the cable. I think over the last few days, and I'm just trying to say it humorously, over the last few days, from here to here, let's call it from 128.75 to 127.25, whatever. You probably had to have your head examined if you were getting long on the way down. I'm saying, from as we broke below 129 and kept going lower. But at this point, and let's move into the cable now. Here we are on the daily. At this point now, you come into some huge value, because this whole area between 25.98 to 2,700 pips, well, we're at the lower end now, and we're almost at the 78%. You know how cable likes the 78%. So even if you take this out, I can see now why people are saying, "Hey, I'll be a buyer." You know what I mean? Because you can already see the end. And just as the story says, the end game, you already know what's going to happen. It's just a matter of, it's like watching one of those B movies. You already know that somebody's going to get whacked, okay? And it's just a matter of like, okay, what do they do? And then the movie ends, you know what I mean? So essentially that's it. So I can see where it's, people starting to look down and say, "Hey, look, I'll buy it here as we go to 26. I bought it at 26. I'm just using an example, 26.40 or 50. I got no problem holding it. I'll hold it for another 100 pips lower." Someone says, "You know what? I'm right there. I'll be there at 25.92, or I'll let them take that out. I'm there at 25.88. I'm buying it. I'm going to hang on." They already figured. They already know what's going to happen. It's just a matter of the timing. So, excuse me. So it says, is effectively over, with only suspense now or when she will announce the date of her departure. The Times and other local media are betting on Friday. Others that she will wait until after the official release of the European Parliament election results on Sunday. Today may see the resignations of more cabinet ministers as they leave a sinking ship and position themselves for the leadership battle ahead. For May, the personal stakes are that she will have a broken promise to deliver Brexit, and so will have a devastatingly empty legacy. But the real question now is who will lead the country next and what Brexit will emerge. Logically, the removal of the player who negotiated the only agreed deal with Brussels makes the more extreme scenarios: a no-deal Brexit and no Brexit at all. No more likely if we assume the May is replaced by someone advocating a harder Brexit, say Boris Johnson. The next step would be for that person to go to Brussels and demand a negotiation. If, as many expect, the EU gives them the short shrift, their default position would then be to wield a no-deal Brexit as a threat. The only snag is that this parliament has ruled out a no-deal Brexit on more than one occasion. So the next move might have to be getting a brand new parliament via a general election. That opens up a whole new Pandora's box. In a way, the Brexit endgame is only just starting. Feeding into the Brexit saga, as mentioned above, are the European Parliament elections starting today in the UK and the Netherlands and closing in most of the rest of the bloc on Sunday night. In Britain, polls suggest May's Conservatives are heading for a wipeout, with Nigel Farage's new Brexit party the main beneficiary. Labour looks set to be punished for a halfway house position on Brexit, which doesn't seem to be going down with either. Leavers or Remainers, while the Liberal Democrats and the Greens look like being the main receptacles of the Remain vote. Take Brexit out of the equation, and the scenario is not too dissimilar in the Netherlands. So let's move on to the markets. Not much good news out there for markets as the assets dubbed safe. The yen, the Swiss francs, U.S. and German government bonds are getting a boost while share markets are taking a hit. Looks like the U.S.-China conflict is now fast morphing into a technology Cold War, and Reuters reporting that the U.S. was considering Hawaii-like sanctions on Chinese video surveillance from Hikvision. The list of firms severing ties with Hawaii is also likely to grow, the latest being British chip designer ARM and Japan's Panasonic. The U.S. military has also said it sent 2 Navy ships to the Taiwan Strait, and there's been some bellicose rhetoric from Chinese state media. Shanghai blue chips shed 1.2% near their lowest since February. Well, I wonder, because I follow the S&Ps, but it almost feels like you're at the precipice of something. We might see a pretty good big move coming Friday. We'll see though, because this thing starts to, looks like it's not so much as gathering steam. It's just like, hey, now it's the complexion of the game is changing, and things are in it. But for lack of a better word, they say morphing into something far more serious that you have to recognize. So, I said Friday. Watch out for today. We may start to see out of nowhere equities, slip on a bar of soap. So, what? It's something to keep your mind on across the board, especially with these safe haven assets. Finally, markets got no joy from the Fed minutes, which merely signaled rates would be on hold for sometimes officials patiently accessing coming data. Most Fed officials also seem to agree that recent weakening in inflation is due to transitory factors, so no hope of rate cut anytime soon. So the dollar's approaching a 1-month high against G10 currencies. On the data front, flash PMIs for Japan paint a gloomy picture with manufacturing snapping back into contraction and new exports failing, fastest pace in 4 months. In the Euro area, we will get the flash PMIs, which you did, and German IFO for May, as well as ECB minutes from April, meaning negative developments on the front mean the IFO survey could reflect weakened business expectations. So any good news anywhere? Well, Indian markets are trading as Prime Minister Modi looks to seal victory. And let's see, enough on that. Let's get on to FX. Yen gains as trade woes. The yen advanced broadly on Thursday as persistent U.S.-China trade fears and Brexit concerns found risk aversion, lifting the safe haven Japanese currency. The Japanese currency also rose 15 tenths against the yen, adding 2 tenths versus the pound. Reports that the U.S. could impose restrictions on Chinese technology company Hikvision renewed market jitters about trade on Wednesday, reversing a relief rally that followed Washington's move to temporarily ease curbs against Hawaii technology. A deepening Brexit crisis also sapped investor risk sentiment. Pressure on PMA to resign increased. Let's move on. We already know about Boris. News related to the standoff between the U.S. and China will remain the main driver, said Junichi Ishikawa. Swiss haven, the safe haven with the yen was a shade higher, 1.00 francs per dollar. Let me see. So that's it there. So let's go move on. Give me one moment. Well, we have a bias report here at 1124. Sorry about that. 1124. I think this 1124, it's important support here. Okay, sounds kind of nutty to say something like that. Here's my take on that. Okay. Let's see, let's go right here. There we go. We'll call them 24. But we know it's important to hold them to defend. My thinking is we may not, excuse me, we may not be able to defend this 1130. And here's my take. What's going to, well, the way that what I'm going to be looking at. And let's go here quickly. Look, this situation with China, it has that feeling. It's as the story says, it's starting to morph into something more serious. So, and the thing about, and let's take a look at something real quick. If you're hanging around, you can see where the touches are. It came out at that 2870. I don't know if you're going to want to hang around and wait. To me, it doesn't even make any sense to wait for anything. And I'm thinking that we're going to end up taking out this 2800, and it's going to and probably going to make a run down here, at least initially down here, which is 2746. I think it's as it starts to, I don't say escalate, but it starts to morph into something bigger. And so my thoughts are, if you look at the cash dollar index, it's got no place to go but up. And I think that you'll see people gunning for the safety. Obviously, the yen, the Swissy, but I think that it's going to hurt. They're going to look for that to hurt, and that's going to ultimately end up hurting the euro, which will then not be able to defend the 1130 area here. So the 1124 is going to be support, but I think there's a chance that we can break lower. Here's what I'm going to do. I think, like I said, if the S&P start cracking, it's going to push the dollar index, and we're going to break lower, and that'll take us down here to 1080. I think this 1124, in and of itself, the euro might be able to hold and defend this area here, but I think that if these S&Ps, and I don't see why they wouldn't crack or continue to roll over, and we might see this bust down even harder on Friday. Now, whether that happens or not, we'll find out. But I'm just saying is, as things continue to get worse, I don't see any reason why they'd be trying to pick this up and defend it. And I think that's only going to increase what's happening with the dollar. And 56.4% of the dollar is the euro. So the euro is just going to get pushed down. It's already weak as it is. And you saw the PMIs. They don't look good. So it just makes sense that the market's going to be thinking anyway that they're going to be wanting to do more, whatever options they can do to spark up the economy, juice up the economy, and they're going to be feeling the pinch of this whole U.S.-China thing even more so, which puts it in a more precarious position, which probably then just goes and shifts us to a whole new move down where we maybe we do make that eventual move to 108. Maybe we'll see, but I think at least initially, if we can't defend 111.30 on a daily close, we're going to 110 with and that's from technical standpoint with a pause at 1080. So on the upside, resistance will be 1180. Moving on to the cable. There's 25. Let's go with 25.70 and let's look at a 2 hour. Yeah, it's called 25.72. 25.72. Initial resistance is 26.95. Until broken. Problem is that's my concern. Is I think these S&Ps are going to take a whack. Let's take a look at the daily. Now, there's no guarantee, but it's good to have, even if at least have some scenarios in your head. You know how you think something's going to go on and play out, and also what if it does the opposite, and if it does nothing. I'm of the ilk that I think might start to garner some momentum on the downside in these equities. Let's look at something else here. Mm-mm-mm. 68.11. We'll call it 68.12 for the 88%. So let's go with that. Just going to go with the technicals on that. 68.12. I think to me, it's at 68.64 until it's broken. Here's the problem is I think that it will end up getting broken because I think if there's no guarantees, but it seems like I said to me, there doesn't seem to be any point now to hold the equities. So I think people would just say, you know what, I'm going to take my ball and go home. And for those that want to push it, we crack, and then we see how far they take them down. I'm not expecting anything cataclysmic. I just think we're just going to break lower here, and it's going to drag some of these, obviously the Aussie low. On the upside, sorry, let's take a look here on the upside. Um, 69.06. Yeah, the thing is also, I can tell you what's going to happen. That I can tell you is that so if we get the break in the S&Ps, they're going to be saying, well, you know, this whole situation with China, it's not getting any better. It could probably get worse. And then the impacts of that to the global economy. And, you know, we did get some back European PMIs. They're certainly going to go and be affected. And the whole issue with Brexit, that's a lot of uncertainty. And when you have a lot of uncertainty, people want to put their hands back in the pocket. But they'll tell you everything after the fact. What you're thinking like, oh, I guess that made sense. Too bad they didn't tell me 50 handles higher. So that's what I'm saying is I think we can go in and break. And when we do break, you're going to find all kinds of reasons why they could go in and break. Okay. And that's what I'm thinking is, I think the Aussie dollar is trying to hang on, but I think these equities are going to knock it lower. And I think these equities will then push the dollar higher, which ultimately will push the euro lower. And then that thing's going to feed on itself and hit a new area. And next thing you know, we're going to take one next run up here in the dollar. But anyway, that's my thoughts there on that. Let's take a look at the Kiwi. Anyway, that's what I'm positioning myself. So if it starts to break, then I'm going with that, okay? Or I'm being careful. Whereas if maybe, I'll give you an example where if I was scalp, I'd say, yeah, I'll pick it up here. Let's see, let it roll into the US session. If it's kind of holding, I'll pick it up I'm not going to pick this thing up because I'm thinking is that if these equities crack, it's going to drag the euro with it. Because then they're going to push it. And the dollar has not only the momentum, it's got the technicals in the sense that it's pushing even to newer highs. So anybody who's still a dollar bear is going to have to say, okay, my stops are at 98.35, 98.40, 98.45, and they'll end up kicking in. The dollar being, like I said, as they rush to the safer haven assets, be obviously the yen and the Swissy, but the dollar it'll move higher also as people look for safety. Initially, it's going to be a rush into the dollar. I think that'll push it even higher, and it's got all the technicals going for it. So it's open to extending a brand new leg up. And this dip back here, which was barely nothing, is just going to add to anybody who might have got short saying, no, it's terrible. I'll have to cover. Now, I might have some people that may be short, and they may differ. But I tell you what, to me, the key driver is going to be these equities. I think that they're going to end up just letting go. Speaking of letting go, let's take a look where we stand here with the Kiwi. Just wanted to give my thoughts on that, or as they like to say, Dad used to say, my 2 cents. Let me give you my 2 cents. That's the way I'm going to be, looking at things and where they come to fruition, they do. Maybe they don't. Maybe it doesn't pan out. But have like a kind of like a, I wouldn't say necessarily a game plan. We do want to have a game plan, but I'm thinking this is a little bit bigger in the sense that I think it's kind of laying out and it's going to start to matriculate, and then all of a sudden, boom, before you know it, we're there and the S&Ps are cracking. Well, if you already know what you want to do in that situation, or you were thinking it was, it's a matter of just, I don't say it's a matter of clicking the buttons, but you can already say, wow, it is manifesting itself. Let me go on and put on that position I was talking about, and here's what I'm looking for is where it may push. Anyway, that being said, so we're pushing a little bit lower here. I think, once again, if I'm playing that theme, if the equity is going to crack, where they do it today or they start to do it today and take it further into tomorrow, then you got to be looking down here, and that takes me down here to 64.34. That's what I'm looking at. Initial resistance is still holding here, but I think we'll end up making that move. So it's going to be 64.34. On the upside, it's 65.37 on the upside. Sorry about that. Hang on. Let's see. And the dollar CAD. This thing is resilient. I like this area here. If we'd made that move on the FOMC minutes for just a nice little dip back scalp right here, we're still continuing to push higher. But then look, folks, look at this doggone dollar index. It's still moving higher. You see what I'm saying? Like I said, if you're long the euro, if you're selling the dollar, all I'm just saying is be careful. I'll tell you what, it's got everything going. It's got the momentum. It's got the technicals. Now, you say, well, the momentum is part of the technical. My point is they've got the momentum here. But I'm talking about the technicals as far as the actual price itself. It's even continue to move higher and higher and higher. That's going to beget more buying. And anyone who's short can say, I got to get out. And then you've got the overall bigger cloud story. Because if equities do break, then it's just going to push the dollar even further. And that's going to push the euro even lower. And when you look at today's PMIs, what is there that tells you I need to be a buyer of the euro down here? That's what I'm saying. It's going to start to probably feed on itself. And so if we do bust them out on Friday, it's just going to push for another leg higher. So, you know, if you were looking at the dollar, you'd be saying, wow, my initial thought was 98.88 or 98.50 or something. Now, as we're closing this week, if that was the case, we end up closing like at 98.60 or something. Wow. Now you're going to start hearing people saying 99.5. You're going to hear par. So once again, like I said, just keep that in mind. Once again, if it doesn't come to fruition, it doesn't. But I'm saying is my take would be is, yeah, the euro could bounce from this area. Keep your eyes on those equities. Anyway, moving it back on here to the euro dollar CAD. Well, to me, it's still all about this 35.04 until we can get above it. We've made a couple little mini stabs, but we have not been able to get above it. That's the resistance here, 35.04. Need that daily close above there. That would open per leg higher. Wow. You know, the thing is, and Steve was mentioning this yesterday when we were talking on the wrap, is that was good retail data coming out of Canada. And look, they turned around and bought it right back. And here's that stab down here from the prior week, 82. Well, we took it that low, and look how we came back. So the point is and just look at it from a technical standpoint, if someone's short, then they're forced to cover right here. Like, I'll give you an example. Let's say that I had said, because I like that 34.45, but I wanted to do it after the minutes, try and make a stab, and then pull back, like maybe dip back into the 20s. Wouldn't have been anything huge, but something. But let's say I said, I don't care. I'm going to go on and short it. I'm leaving my limit there at 34.45. Well, as this thing were to start to move higher, I'd be like, oh, man, if it closes above this, then I better get out and so forth. And but right now it's going to be 35.04. But my point is you're going to have continued momentum. And more buying begets more buying. The real true test is going to be 35.04. But I tell you what, look at the dollar index make a new high. So it's just continue to add on to that. And if equities take a dip, that's probably going to drag crude oil, and I can already see crude oil's already had a pretty good dip. So it's just going to add more fuel to the already positive fire, if you want to call it that, or bullish fire. So it's going to be 35.04. And support. And you see here, look at this close right here, right there. You see that? 69. So even the most ardent bears would have to say, hey, look, if we get a 2-hour close before that, I got to get out. And look, it's been relentless. One thing I will point out, and I was looking at this yesterday, look at on the exponential moving average, because I do use the exponential on the 30-minute. And look at that. It was sell, 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 sell. It kissed it, remained sell. Kissed it again, remained sell. And guess what? Now it reflected the buy right there. So that's what I'm saying is, I was looking at it yesterday saying, you know, you wouldn't really want to be short unless it was a quick scalp for value, because it already rallied up in here. But look at this. It's been on a sell mode this whole entire time, and then it just flipped to buy. So now you've got the momentum going forward. And like I said, we'll see what happens because the dollar index is pushing higher. But if you're short, like I said, if I had said, I don't care now, if it didn't make it after the FOMC minutes, I'll still sell it. Well, I'll tell you what, I'd be singing the blues. To be honest with you, at this point, I'd just go in and get out and say, you know what? Because it'd be above this close, 2-hour close. I'd say, you know what, I'm wrong. I got to get out. You know, it wouldn't have been that much of a hit, but once again, I'd be looking at myself and kind of kicking myself if I held it for more than a scalp, and we can get that at the FOMC minutes because now it had a chance to digest. But the thing is, look at it. It's got the momentum going for it. And look at this. If you can look on here, sell, all the way down here before we flip to a buy, and look how long it runs up to a buy. Okay. Then look at when it flipped to a sell. It stayed in the sell this entire time right here. So from 34, it looks like about 34.70 all the way down to 33.60. But we turned it around and look at flip back to buy, and look, it's got that momentum going for it now. And with this cash dollar index and then crude oil moving lower, hard to be against this thing. Support right now would come in right there at 34.38. And it's very tight right now because this thing just doesn't want to seem to really want to give up. I guess we have to move it just a little bit lower for right there. This touch, that touch spot there, call it 34.33. But this thing certainly has some good momentum. Let's go and go to the peso. I thought Steve made a good point yesterday. He was saying, I wouldn't mess with this thing. I don't know if those were his exact words, but oh, what the heck? Doggone it. And he's doing a whole lot of nothing. We broke above this trend line, and I'm going to go to the daily so we can kind of focus on one. And remember, we did get over a week and a half ago a buy signal on the exponential moving averages. You see right here, and that's on the daily. So this is from a longer term perspective, and it did rally, and it would take the positive side, but we slid right back down here. We're kind of holding just above these lows. I think we had, I don't know if it was 1892 or 90 we had as our bias chart support. 1892.9, okay, and the low was 1893.7, okay. But it's doing a whole bunch of nothing, and it just doesn't make any sense because you're not really being rewarded. I mean, I think you'd be expending a lot of energy for a bunch of nothing. So we'll stay with this 1892. We had his 1892.3, I think it was. We'll keep that there, 1892.9. And resistance we had is 1912. Resistance is 1915. Let's go to the 2 hour. It's going to be 1911.72. 1911.7. Well, it's just about there, 12. Let's go move into the dollar yen. Well, kind of pairing back in here after we made that run up to that 1066. Yeah, thoughts from last week was it could make a move up there and pull back, and then I thought it might be able to stretch out to 1080, but you know, it doesn't look so good if once again you're playing into that whole idea, what if the equities crack? So at this point now, under that I want to say under that premise, but under that idea, I think we have to tighten this up quite a bit. And resistance would be 1046. Initial support. Hang on a moment. Let's go with that 1083. No, I meant to say 983. And on to the cash dollar index. No changes here in the cash dollar index. 98.33 is a resistance. Support, we'll move it to 97.78. And let's move into the cross rates. Here's that. We talked about this yesterday. I think Amanda pointed that out in the chat room, and I discussed it with Steve. It's not a pair that I follow at all, but I know some of y'all do trade it. And look at that. We got that little hammer bottom at the 61%. Look on the daily and look at it, add a little bit further onto this. Anyway, we'll just get back to this New Zealand yen, Kiwi yen. We're holding that 71.45. Same thing with the play on the equities. If that happens, not wanting to be caught with the pants down, we'll go with this 70.98. 70.98. And this thing's going absolutely nowhere. Resistance might be there at 72 cents, 72.06. see here. If they break this area, it's going to be bad news. And same thing along those lines. If they do, and you'll hit some stops, somebody look at that 22.22. And looking on the resistance. $23.16. And definitely a lot of these levels are going to be going all the way through to tomorrow. Looking at the euro odd. This is interesting. This one's really interesting. But once again, I think that it stands the potential to go in and break down. Especially, look, the Aussie's pretty well beat up, okay? And the Aussie will incur its own issues if equities break down. But if the euro breaks from this area of 1130, then people are going to be talking about 108, 109. There's more potential for the euro to lose. So, right now we're going to go with 61.57. Upside is 62.28. This one looks like it might climb up, but like I said, once again, if you're playing into that whole concern about the year, and if it does take a shift lower, we'll go with the 72.10 on the stretch on the upside. No, right here, 71.92, 71.92. Initial support 71.07. Aussie yen. Yeah, I'm going to go with the 74.73. 74.73. It's not something we necessarily see today. Maybe not even tomorrow, but we shall see. If we crack, that's what I'm saying, is I think we'll really crack. See, look at this. You'll end up breaking this whole area. On the upside, $75.95. Always stay below $75.95. And looking at the guppy. You know, 7 days ago or whatever it was, I wouldn't have thought of like this, I think we were up in here somewhere, and I was looking at it, and I was doing the analysis on the daily on this. And I was seeing how big this 39.95, and I'm thinking, boy, it's going to be pretty tough for even to get there. So I must have been around here. Look at that. We're still pushing lower. Well, potential for 38.18. 38.18 is pretty big. Let's call it 38.21. This whole idea that the yen strengthens here. With resistance, $39.55. And it's turning on. We're really hanging on right now. On a value right there at 83.25. Potentially down 83.23. Yeah, we already have it down here. That's going to be pretty tough to get down there. We'll see. Resistance is right there at 84.29. And that's the bias chart, and I'll get that posted in the room. And thanks for joining us here on the European crossover. And we'll catch you later on the wrap.